Trading. Full breakdown for BGNNERS. Ladies and gentlemen, today we're going to break down something that millions of people talk about, but very few actually understand. Trading. People hear the word trading and instantly think of money, charts, fast profits, risk, Forex, crypto, stocks, blowing accounts, or becoming rich overnight. But that's not what trading truly is. Today I'm going to explain trading from the ground up, slowly, clearly, and deeply, so that even a complete beginner can walk away understanding exactly what trading is and how it works. This is not a motivational speech. This is not a hype talk. This is a real explanation of a real skill that has changed people's lives, both positively and negatively. Because just like any serious skill, trading rewards knowledge, discipline, and patience, and punishes greed, emotion, and ignorance. Let's begin. 1. What trading really means. At its core, trading is the buying and selling of financial assets in the financial markets. That's it. You buy something at one price and try to sell it at a higher price. Or you sell something at a high price and buy it back at a lower price. This applies to Forex currencies like USD, EUR, JPY. Stocks companies like Tesla, Apple, Amazon. Crypto, Bitcoin, Ethereum. Commodities, gold, oil. Indices, S&P 500, NASDAQ. Bonds, even NFTs or digital assets. Trading is simply exchanging one thing for another with the goal of making a profit. But the real story behind trading is much deeper. 2. Why trading exists in the first place. Trading exists because markets exist. Markets exist because people need a place to exchange value. Before modern technology, people traded goods, animals, food, tools, clothing. But today we trade financial assets because the world runs on money and global economies. Trading gives the world liquidity, ability to move money. Price discovery, finding the real value of things. Risk management, hedging. Investment opportunities. Every time you hear people talking about the market, they're talking about a place where people exchange value. Trading is simply participating in that exchange. 3. The two main types of trading. A. Short-term trading. This includes scalping, day trading, swing trading. Short-term traders aim to make profit from short price movements, from seconds to days. B. Long-term trading. This includes investing, position trading, holding assets for months or years. Long-term traders aim to grow wealth slowly over time. Both types are valid. Both require skill. Both require discipline. But they are completely different in mindset, strategy, and lifestyle. 4. How trading works, the simple version. Trading works in 4 simple steps. Step 1. Read the market. A trader looks at a chart, news, or economic data to understand where the market might go. Step 2. Make a plan. No trade should ever be random. A trader decides when to enter, when to exit, how much to risk, what strategy to use. Step 3. Execute the trade. A trader buys or sells at a specific price. Step 4. Manage the trade. Once the trade is open, the trader moves stop losses, takes profit, closes the trade if needed, adjusts based on market behavior. That's the structure behind every trade, simple, but not easy. 5. What moves the markets? Markets don't move randomly. Prices go up or down because of forces like supply and demand. If more people want to buy than sell, price goes up. If more people want to sell than buy, price goes down. 2. Economic news. Interest rates, inflation numbers, employment data, GDP, political changes. These events move large amounts of money. 3. Psychology. Fear moves markets down. Greed moves markets up. Most candles on a chart are simply showing emotion. 4. Institutions. Banks, hedge funds, governments, corporations. They move billions. Their decisions shape the market. Once you understand these forces, trading becomes clearer. 6. What traders really do, not the fantasy you see online. Online you see people flashing profits, holding phones, sitting in cars, living luxury lifestyles. That is not trading. Real trading is hours of charting, backtesting strategies, journaling trades, studying patterns, staying disciplined, managing risk, staying calm, following a plan. Trading is boring. Trading is repetitive. Trading is systematic. If trading feels exciting, you are doing it wrong. 7. Trading is a skill, not a gamble. People who lose money in trading fall into one of these categories. They don't study. They don't have a strategy. They rely on luck. They trade emotionally. They over-leverage. They trade without understanding risk. They want to get rich quickly. Trading is not slot machines. Trading is not quick money. Trading is not a shortcut to wealth. Trading is a profession just like medicine, engineering, law, architecture, coding. You don't become a doctor by watching a 10-minute video. You don't become a profitable trader by watching TikTok clips of profits. Good trading takes education, experience, psychology, risk management, discipline. When people treat trading seriously, trading rewards them. When people treat trading like gambling, trading destroys them. 8. The tools traders use. Every trader learns to use tools like candlestick charts, support and resistance levels, trend lines, moving averages, trading indicators, market structure, economic calendars, risk calculators. But the most powerful tool is your mind. A trader with strong emotional control will outperform a trader with expensive tools but weak discipline. 9. The psychology behind trading. This is the part most beginners ignore. You must understand fear of missing out, fear of losing, greed, overconfidence, revenge trading, impatience, lack of discipline. These emotions destroy more trading accounts than any strategy. Your mindset is more important than your method. A bad trader can ruin a good strategy. A good trader can make a simple strategy profitable. 10. Risk management, the heart of trading. Every trader must understand one truth. You will lose trades. You will lose money. Losses are not failure, they are part of the game. Risk management ensures one loss does not destroy your account. One mistake does not erase months of work. One emotional trade does not wipe out everything. Professionals risk 1%, 2%, maybe 3% per trade. Beginners risk 30%, 50%, sometimes 100%. And then they wonder why they blow accounts. The difference between a gambler and a trader is risk management. 11. Why people trade. People trade for many reasons. To build extra income, to create financial freedom, to escape a job, to understand the markets, to develop discipline, to learn a valuable skill, to control their financial future. But the best reason to trade is this. It teaches you how to think, how to control emotion, how to make logical decisions, how to manage risk, how to be patient, how to grow mentally. Trading is not just financial growth, it is mental growth. 12. The reality of trading success. You will hear stories of people making $100 in minutes, making $1,000 in a day, flipping accounts, getting funded, passing challenges. Yes, success is possible. But hear this clearly. Trading success takes time. Trading success takes discipline. Trading success takes consistency. You will not become profitable overnight. You might not become profitable in 3 months. You might not become profitable in a year. But if you stay disciplined, learn properly, build a strategy, and treat trading like a profession, success becomes achievable. 13. The beginner's path. If you're starting today, this is your path. Learn the basics, what markets are, how charts work. Study price action, how price moves. Pick a trading style, day, swing, long term. Learn risk management, crucial. Choose one strategy and master it. Backtest it, prove it works. Demo trade, practice without risking money. Go live with small capital. Journal your trades. Improve slowly, consistently. It's simple in theory, but not easy in practice. 14. The truth every trader must accept. Trading is not for everyone. It requires patience, discipline, self-control, emotional strength, consistency, responsibility. Most people fail because they cannot control themselves. Your worst enemy in trading is not the market. It's you. 15. Final message. Trading is a journey. Trading is not a quick win. Trading is not easy money. Trading is not magic. Trading is a skill, a mental game, a profession. If you take it seriously, it can change your life. It can give you financial control. It can teach you discipline. It can build confidence, but only if you treat the process with respect. So if you want to be a trader, understand this. Success is slow. Consistency is everything. Emotion is your enemy. Risk management is your shield. Discipline is your weapon. Education is your foundation. Trading rewards those who are patient, disciplined, and committed. If you can develop those qualities, you can succeed.